All right.
It's like we're getting a move.
Yeah, we are. We're starting to get a little move here. Kind of broke out of that wedge we were in for the time being, at least. So, all right, folks. Hey, thanks everybody for coming out to FNL's opening bell sequence where we go ahead and OODA Loop our charts. We have a plan for the day. You'll also see us do the FNL OB30 trade where we grab momentum out of opening bell. We use the first 30 seconds that the market's open after the New York Stock Exchange opens. So what we're trying to do there is grab momentum. So sometimes we have to take a few swipes at it, but hopefully today we'll see a price maybe just take off and we'll be able to get a nice trade. One thing that we try to do here in the morning is not try and predict where we think the price is going to go. Oh, the price is going to this level today, or it's going to that level. What we do is we set levels on the top side, we set levels on the downside, and then we also identify a chop zone. And that way we have a plan for when the price goes there. So we're not trying to actually predict where the price is going to go, but to have a plan for when the price goes there. So just remember, trading futures contains risk. Only risk capital should be used. You can lose all your money trading futures, trading crypto, trading options. So use risk capital, very important. And then also develop a track record. So how you doing this morning, Travis?
Pretty good. How about yourself?
Doing good. Feeling good, It's hot as heck up here in Northern California right now, even up in the mountains. At 3,000 feet, it's pretty hot. So
it's hot here yesterday in Georgia.
Yeah, pretty hot, huh?
Yeah.
Pretty muggy, I'll bet too, huh?
Yeah, it's just really hot.
It's just hot. So, all right, let's go through the 5-minute chart here. Take a look at it. Quick review, and then we'll start bouncing around our longer term charts, and then we'll end up back here at the 5-minute, our execution chart before we do our opening bell trade.
Cool. So first thing, I had a wedge mark this morning, you can kind of see, but we had a heavy consolidation into that one candle just broke out. Before that, 3 different times we hit this same level at 34-ish, 25.
Mm-hmm.
So if you wanted to mark that, probably a good place to be aware of. If I'm going long, I want to fill before that area because of how likely it is to hit resistance there, turn back. Or at least I want to scale out of my trade at that point. If I'm trying to extend a trade, that's a definite first target, if not before then, depending on my stop. So just a thought there, market. First thing first shows me we're making higher lows on the bottom on the way up, and the top is a brick wall made of steel by the Romans or something, whoever did it really well. So,
and too, if you scrunch up your charts a little bit and just kind of see what happened overnight, I mean, huge move overnight. We were talking about this in opening bell, or prior to opening bell here, about how steep the angles of the EMAs were and how they were diverging. And that's a lot of times how you can tell the strength of a trend is when those EMAs are getting farther apart, especially the 89 and the 21. Now you can see the EMAs are getting closer together. So that was when this trend was at its best, its strongest. Now it's starting to come together a little bit. So it's starting to weaken.
Yeah, you can see the short term and the 89 are really close together. The 89 and 200 are still far apart, implying that this was just a long move without many retracements. So now we're watching the reaction of, is this going to continue into a really good uptrend, or are we overextended and going to pull back? And the fright from that leaves a lot of people to almost make this self-fulfilling prophecy where when it gets near the top, everybody wants to go short because they're scared. When it comes back down, all the long traders are back in. The short traders say, well, I'm going to scale out because I don't know if it's going to go or not. So you end up really squeezing tight till the market chooses a direction, which is part of the reason we kind of stepped back this morning from a foundational trade standpoint. The last one that was reasonable in my mind was the 8 o'clock one. After that, we were consolidating so hard. At 8 o'clock, you would have had headroom. I could slow down and go through that in a little bit, but you want to finish opening bell first?
Yeah. Why don't we do that? Well, then we got the OB30 trade, which we kind of get active in. So I would say go ahead and talk about that trade real quick because, I think that trade is actually a pretty good trade. And then as we move forward, the trade, we had some other opportunities there too, but it just kept getting worse and worse in terms of how much headroom you have because of those tops coming down and not making higher highs at all.
Awesome. So from a foundational trade standpoint, without putting rules on the screen, we're looking for a trend, we're looking for a retracement, then we're looking for confirmation of a turnaround in the form of an FNL diamond or a double bar to key level. So let's back all the way up. We'll go through this candle by candle. I've seen an uptrend. I know, first of all, even before this retraces, first thing I notice is what we talked about earlier. 3 different tops that tell me if the market can't get through there, I don't want my trade going through there. So I'm thinking long because we're above the 89, we're above the 200. We'd been up all night. I already see that. We've had some big retracements. We're making higher lows. So the trend is up, if anything. But with this uptrend, we have a ceiling up there that, again, couldn't get through at 34. So first thing I notice is that. Now, as it pulls back, I'm waiting on, I'll just go ahead and talk through. I know we have opening bell coming up. So I'm waiting on confirmation of a turnaround. That sounds complicated, but bottom line, I need a green candle. Once I get a green candle, I can decide, is that turning around somewhere I like it? Is it a diamond? Is it a really good turnaround? But bottom line, I cannot get into a trade unless I have an up candle. So as this retraces, I'm watching. I think you saw the fib levels on earlier. We like to measure fib, 30 to 70 retracement. I'm going to use the bottom of this last move, but you could use, a lot of times it's debatable. Like in this case, you could use the very bottom of the move or the last one or the one before that. It's tough to say. But in this case, we're about 382 heading on our way down. And then next candle shows up, we're still red, so can't get in yet, but it's at the 89. Very good key level to see it turn at. We talk about EMA bounces. A double bar from a key level or a double bar from the 89 is a very solid trade that I've proven in a track record over time to trust. So as we move forward, there's our green candle. So this is my confirmation candle. And during this candle painting, I had to do all the thinking we're about to talk about so that upon the close of this candle, I can make my decision. And my decision will be either to enter at market or to set a limit order wherever I want my trade to be. Underlying assumption in this case, we're going to assume we need a clear stop. Some people might decide at times that they don't need a clear stop in a trade, but for presenting purposes in my own zone right now, we're going to assume we need a clear stop. First things first, I'm going to look at the market, say, I like this trade. Now I got to choose a strategy. So I decided I like the trade based on the setup, and as this green candle's painting, I have to decide which strategy fits best. A great starting point for a stop is ATR, the standard 14-period ATR. I really like how it works in terms of giving me a starting point. Not a this is the trade you have to take, but in this case, let's not draw in a color we can't see. In this case, it gives me a starting point, say 4-3, because that's the closest stop to there. But I'm also going to weigh the smaller strategy, which is 3-2, and the bigger one, 7-5. So 3 different common risk management strategies, knowing that there's a good chance I take the 4-3, but I'm going to weigh the other 2 just to see which one fits the best. So in this case, we'll keep 4-3 green, we'll do 3-2 in blue, and 7-5 in maroon pink color. So if I'm looking at a 3-2, we'll start small. If I'm looking at a 3-2, I have a 2-point stop, right? P3, S2, that means a gain of 3. So all of these would be a gain of 3 or 4 or 7 respectively with a stop of 2, 3, and 5. So in this case, I want my stop to clear. I'm going to put my stop around 23. So if my stop has to be 23 to be in the trade, then my entry point would require 25. So in order to get into a 3-2, I would have to have a limit order at 25. And my gain would be 28. So I'd have a 3-2, and we'll just go ahead and mark that 3 points up and 2 points down. That's my blue one. Now I'm going to look at a 4-3. 4-3, I said I'd do in green. So a 4-3, again, I want my stop at 23. Whoa, we don't need that kind of 4-3. Let's undo that. 4-3, stops in green, 23. So my entry could be 26, which just so happens that's right where we are. And then my gain would be 30 in this case. So on a 4-3, I would be looking at a gain of 30 and a stop of 23. And then I'm going to look at a 7-5. And I'm going to see P7, S5, gain of 7, stop of 5. I know that from my entry point, my stop would clear. So I could put that I want my stop at 23, but I know that from 26, my stop would be 21. So I have no reason to have to set a limit order back. My stop is just fine. And then I look at the gain side, and that puts me at 83. I about said 13 because 7 and 6 is 13. But 36, 38, 33 is my 7-5. So with this, if anybody wants to comment, they're welcome to. But now I have to decide which strategy fits the best between a 3-2 where I might miss the trade because I need the market to pull back about a point to pick up my order, and then move forward, which isn't a bad decision, just kind of commenting notes. And then the 4-3, I could enter at market with a clear stop. The 7-5, I could also enter at market with a clear stop, but it's a larger gain. So just based on that, which one do you like best? Anyone?
Well, I know what I like, but I'll let somebody else answer.
Sure.
Anybody? Type in chat. Governor likes a 7-5. I like that bigger stop for sure. For me, a 4-3 would be the best trade here because I don't want to have to, with the tops coming down, I have a little concern that this might have a tough time getting all the way up to 38, 33. So I can clear my stop with a 3-point stop, right? And then a 4-point gain would put me really right in the heart of the price action.
Right. And I know that I agree with you. I like the 4-3. So before I carry forward, I like the 4-3 too. The 3-2, the position's okay, but I don't see a need for the market to come back and get me. I like the way the 4-3 fits. I don't want to risk missing this trade the way it sits. It's not worth missing this trade to have better position. So I don't want to take the 3-2. The 4-3 fits because the stop is safe. The 7-5, the stop is also safe, but because the 4-3 is considered safe to me, I don't want to chase the bigger gain. So to me, the 4-3 becomes a higher percentage trade than the 7-5 because both stops are safe from my entry point, relatively speaking. But the 4 points would be easier to go up than the 7. If I had a key level or something I wanted to clear on the bottom, I might think more towards 7-5, but I don't see a reason to clear more than the recent turnaround. So I like the 4-3 in this case, not trying to do too much. I know there's a common tendency to take it and just extend every gain to the last high. What I've realized over time is that if I only have to go halfway up, just take the higher percentage trade. So to me, I like the 4-3 as well, but we're going to move forward and see which ones would have filled just the way these are set up. Again,
and we also have to understand too that the trend is really leveled out. So,
Right.
When the trend levels out like that, I mean, if we were looking back 3 hours, 4 hours ago, we could go for those little bit bigger gains because of the higher highs were being made. We haven't made a higher high since about 1:40 in the morning.
Agreed. So. And because we had exactly a triple tap and a lower high really on the last one, kind of scares you into not wanting to get all the way up there. I agree with you. A lot of times I really like to use the bodies of candles. If I'm saying I don't want to break the last high, I'll use the body of the candle as a limitation. The 7-5 is right up against that. So I can't say that it wouldn't fit the rules, but I think a 4-3 fits a little bit better in this case.
Agreed.
So as we move forward, I'm just going to go straight to the right, and you'll see which orders get picked up and how they would have worked out. And in this case, we pulled back. So at this point in time, the 4-3, the 7-5, and the 3-2 are all in the trade. Nobody stopped out yet because we cleared our stop. Again, underlying value that you needed a clear stop. And move forward. So now our 3-2 and our 4-3 have both filled.
Yep.
Without a doubt, 3-2 and 4-3 following a repeatable set of rules, meaning if this trade showed up tomorrow, the next day, and the next week, you could still take the exact same trade at the exact same point in time with the exact same strategy. And hopefully, maybe even not the same number of contracts. If you're a few months down the road repeating your decisions, that might be the only difference is your number of contracts. Right. And that's the goal with trading, is to have a decision that's so precise that you're comfortable. You've done all your thinking before the trade. You get here, you say, okay, this is what I do, this is when I do it, and this is how I do it. So let's continue.
You're forced to trade. You see the trade and you're literally forced to trade. So
as this went forward, 7-5 hasn't filled yet, but it also hasn't stopped out. So I can't say that the 7-5 stopped out or filled yet, but we've hit consolidation after the 4-3 and the 3-2 both without a doubt have filled. So
perfect. There you go. All right, let's go to the daily chart. Great analysis on that trade and why we would take that trade. And maybe, there's other reasons why we would not have taken the two that came after that, but we can get into that maybe later. So let's head over to the daily and see where we're at on the daily.
Sure. Yeah, we got 10 minutes. Let's do it. Plenty of time.
Yep. So we got out of our little consolidation that we were in. We were consolidating there for about the last week or so. Did make a lower low, had a retracement, kind of moving sideways. Now we've broke out of that consolidation, but now we're at the key level again, aren't we? At the top.
Yeah. So one thing I see that we're approaching, common tendency, a lot of times what was support is resistance. What was resistance becomes support. All I see to the left is all these wicks. And it's like we're crawling back into that area. You could see the first time we really hit rejection. Now we're coming back up there again, like you said. So really anywhere between where we're at and all the way up at 3,900 really is just a bodies to wicks area that's very likely to reject us. So what does that tell me? That tells me I like the uptrend if we stay in an uptrend, but I can't get so biased up because if this turns around at any point over the next, I mean, even 100 points up, it's now retested a perfect support to resistance area and it's a picture perfect area to go down from. So I just need to watch kind of larger charts, see what we're hitting at, and maybe use the 289 on my execution chart just to say if we stay above it, we're good. But if we get below that 200 and below the 89 on a 5-minute chart specifically, it's like maybe I shouldn't be looking long anymore. I need to take that step back.
Yeah, and I would say if we're going to build some levels on the top, I would say your bottom, the bottom here would be our first level that we'd look to go to, and then we'd probably look to go to the gap, and then we'd probably look to fill the gap. Those would probably be our 3 levels on the way up. That would put us at around 3,900. Those 3 levels on the way up.
So yes, like Rob mentioned, that white box is a gap that we had between the daily. The blue one is a bodies to wicks area from back in May. So
on the way down, what about on the way down? What if this does decide to turn around up here? We've been seeing this, we've been seeing this triple tap. What if it decides it can't get by that and it starts falling? What kind of levels do we have on the bottom side?
3807, 3810. It's the bottom of the yearly one from a year ago that hit almost perfectly. So it's the bodies to wicks of March 24th. And the bottom of that roughly 3807. And you can see we came back, retested it as support once, almost exactly to it, but we used that level strongly before pushing up. So I still trust it. And now we're right in the middle of it, heading to the top of it. So it's likely we hit resistance at 3842 even, and that's right in front of us. Might explain a little of the consolidation we're seeing now is that a lot of people are thinking it might be time to start turning. Yeah, it's not my decision to make. Our decision is to take a step back because I don't control the market. So I'm just going to see what happens and go from there. But it is a good spot, so we might see. I mean, it's tough to make a prediction. There's no, this is my exact advantage. It's really like either way could happen, and I'm okay admitting that because when I don't have an advantage, I need to be able to recognize that as much as I do when I do have an advantage, right? So in this case, I just know the daily is a big question mark in terms of we are retracing, but we're retracing in what was a downtrend, and you could even use Fibonacci levels. I think we have one set right here. You can see from the top, let's stretch it down to the bottom of the move, and we're getting closer to 382. So are we pushing up now? Absolutely, and I can't deny that. But at the same time, we're pushing into perfect areas for the market to turn between the 21 EMA at 3,900 and the big gap there and the old support levels. There's just so much between where we're at and 3,900 that could be a little shaky.
Be a little shaky. All right, let's go to the 240 4-hour chart. So this really kind of shows that the level right above us is, getting above that. Boy, if we get above that, we could see a nice run up here. We really could. If we can't get above that, then we see a nice run down. I mean, it's pretty obvious. We get above this. Whoops. Sorry, the line isn't very straight, but you see what I'm doing there.
We got the concept.
Yeah, get above here, folks. Now we've got a lot of price action we could recover on this 240 chart, on this 4-hour chart. So I'm not saying the price is going to go up. I have no idea what it's going to do. Like Travis just said, it could come up to here like we did earlier, and boom, just want to drop back down, get back into the trend that was down. So
all the opening ranges from the week are below us too. So hitting those could be a great spot to see us hit support and turn up. See how all those orange boxes kind of stack right there at 3780 or so? Those are the 30-second opening ranges. Knowing that there's multiple in that area tells me even if we push down, 3780 becomes really a first place that I see it slowing down at.
Yeah, and we always, we look at this chart and go, oh man, look at the price go up. Well, does this not look like a great spot if this was a 5-minute chart? Let's just say this is a 5-minute chart. Does this not look like a great spot for the price to want to retrace to that level that you just talked about, to those opening ranges? I'm not saying it's going to do that, but this looks like, to me, it looks like a spot to where this price may want to retrace and come back down.
And then if you shrink it all the way, it looks like it is a retracement. See? So how it's like larger term, kind of like the daily look, it looks like it is a retracement. So both give you a reason that it might push down here. Yeah. It's due for a retracement in the uptrend, but then the longer term really tells you, again, we looked at that earlier, about 382 on the way up.
Yep. So again, we're not trying to predict that the price is going to go down or up. We're just trying to be prepared if it does one or the other, and it will, unless it decides to chop. And I think that once we get to our smaller time frames, we're going to be able to define a pretty strong chop zone this morning to where we can just stay out until the market does something that gives us a real good clue of, where the price may want to go today and what levels it may want to break. So
right. You say we're not trying to predict, but what we are trying to do is know when we're going to have an advantage ahead of time. So know what I'm looking for. Know if this happens, I know that that's what I want to do with it. Not necessarily like I have no idea what's going on today, so I'm just not going to say anything. No, what we're really trying to do is define the levels and show that, okay, if we push above that and retrace, now we're in an uptrend. Now I trust the trend and I'm going to start trading long. If we push below a certain area, okay, now I trust the trend down, I might trade short. You might see a chop zone somewhere in the middle where you get kind of choppy. I know levels can create expectations. So if I'm trading long and I see a big daily level in front of us, I have to slow down and say, okay, maybe I don't trade through that. But again, we define our advantages ahead of time, if you will. So know when I'm going to have an advantage.
A minute and a half.
I see it.
All right.
60 minute.
60 minute. Go make it quick. We're going to make it quick here. Consolidation on the 60 minute, right? Our last 1, 2, 3, 4, 5, 6, 7,
yep.
8, 9.
This is squeezing really tight. And even if you used a bigger angle, same thing, squeezing really tight on the way up. So
yep.
Agreed.
Okay.
Consolidation.
Perfect. 15 minute. Yep. And our goal really, folks, is for you to be able to do this on your own, right? To be able to hopefully watch these enough times and be able to go through these charts and look at these time frames. And, and typically you'll be able to do it pretty quick. So again, same thing. Look, here's our chop zone. Pretty well defined now. There's our top, right? There's our bottom.
Yeah. And even then, I still like to use the angle to say a bottom is really just, I don't want to do anything with it.
Right. I agree. Let's go to the 5.
And look, here's our old consolidation back to the same level up top. I mean,
yeah, there it is. There's our chop zone. For me, that's if I'm operating in this area, folks, I'm not really stoked about taking a trade. Not really happy about taking a trade. Now we're going to take a trade at the opening bell because of our OB30, FNL OB30 trade. But, I would really love to see this break out and keep our move up. But I can't predict it's going to do that. I don't know what it's going to do at opening.
So in hindsight, the 7.5 would have filled 2 now, by the way. The example we did, 3, 2, 4, 3, and 7.5. If you had followed the rules on the trade at 7, or followed a set of foundational rules, or a set where you had to clear your stop and get in on the confirmation candle of a retracement, I know we're in the OB, but all 3 trades would have filled.
Yep.
So let's go to the 30-second. Wow, this is interesting.
Yeah, get on your opening range account, folks. If you're taking this trade and you're the right risk management strategy, we're using a 4 contract. And we'll get this opening range set here. All right. So I didn't get anything yet. Did you? I missed it.
31, 36.75. Yeah, it's still inside.
There we go. Okay, it's set.
It's going to be a good one because it hasn't broke out yet.
Yes, I agree. So on the top side, we have 36.75. And on the bottom side, which we just got into a trade of 38.31.5. Now, hopefully we can get a direction here pretty quick and not have to get chopped up. And first chop out of the trade. And we'll try to get in at the top now. See if it'll run out the top. So what I look to do is do it 2 times at the current contract level. And then I'll reduce my risk and do it 2 more times, and then I'm done. We want this to be easy. We do not want to sit here for the next 15 minutes getting chopped up. When price likes to move, grabs the momentum out of opening bell, it goes. And we're in at the top. So now our first target, 4 points above us. And we'll look to get out of 2 of those contracts. And then we'll have 2 remaining. So our first gain will be at 4 points at 2 contracts. And there we go. So we're out of our 2 of our contracts. And you hear Randy's cash machine going. Getting his fills.
Yeah.
Now now we'll look for our 8-point fill on our third contract. And then our fourth contract, we've moved out of the way for our runner. So in case this does decide to go to the moon today, which would be nice, wouldn't it? We can be in a trade. Yeah, and we can possibly even look to stack on. That's something else we'll be looking at more of. A lot of times these fib levels that we've been working on may be a good place to stack in, certain levels. So, but our bias now has to be long. It did break through that level that we had put in earlier. Remember the 3 areas that the price could not get through? Well, guess what? It got through it.
Tested the top of a daily level. I always like when you see a level set there and it just comes up, shows a double bar right against it. It's like, even if I don't trade it, it's like, yeah, it's in the right spot. We're going to leave that one. Congrats, Bernie, 7-5.
Way to go, Bernie.
Yeah, I think long was the direction. The headroom was questionable, but the bottoms were coming up. We've been up all night, so I still agree.
Yep.
You could make a case for both, but my decision would have been long as well.
I picked up 9 1/4 on that with a 5-4.
You picked up 9 1/4 with a 5-4. So
yeah,
that means you must have extended your gain.
I did.
Okay. As long as you have a target of where you want to extend your gain to. I think that's the key thing is when we just start randomly, we don't want you to randomly pick a number, but have a target, why you picked 9 points. That's planning your trade.
So I've noticed a common tendency, if you will, is to extend every gain to the most recent high, even when you might not need to. So let's say, I'm going to go to a 5-minute, but let's say either a 4-3 would have filled. I'm just going to try and draw this because it's tough to talk about. Look at this candle, though, on the 5-minute. That's cool.
It's beautiful, isn't it?
Yeah. So let's say we've got an uptrend, and we come back, we show a turnaround, we have this
just got our
perfect.
We're in our runner too, just to let folks know.
Yep, in the runner, and I'm going to move my stop up just a little bit, and then I'll apply a trailing stop.
Me too.
But we'll just move it towards break even and see how far it goes. I'm not going to lose anymore. But in this case, so let's say we have our diamond, we have our retracement, 618, perfect looking trade. I realize that I have a strategy here that I can clear my stop and my gains about this far up, right? Relatively speaking. Common tendency of a trader is to take this profit and just move it up to the top of the move and say, my high's up there, that's where it's supposed to go. And I've noticed that even though you might grab those points, it's a I could call it a common downfall of traders, if you will, trying to extend every gain instead of just letting this yellow trade be its 50+% decision, 55+, whatever you want to put on it. Because once you extend that gain, you make it a lower percentage trade. Can it still be profitable? Maybe, but one big learning lesson I've had is not trying to do too much with a really good trade. Just accept that it's a higher percentage trade the way it sits, and that's an awesome trade, and I'll just take my gain where it's at, rather than saying, this is an awesome trade, let me extend my only gain. Now, if your strategy is to scale out, we can talk about that. It's a separate conversation, if you will, but keeping things simple from a risk management standpoint, common downfall of a trader is to take every trade, even when it's safe to take a 4-3, they're going to extend it to 6 or 7-3 because the top of the last move is 6 or 7 points up. And a lot of times you'll realize that the 4-3 would have filled and the others won't because it's a higher percentage trade. Not all the time, but it's just learning lesson for me. So that's something in my zone, not trying to do too much with really good trades.
Now I have my runner in at 38.77. Can anybody tell me why I might pick 38.77? I know it's up there a ways. I want to get it out of the way. Typically, when I'm in a runner, I want what? My stop to get me out, not my gain. But can anybody tell me why 38.77 might be a number that I have for my top? And now you probably won't see it on a 5,
You will. You won't know why though.
Yeah,
There's
there
a
you
big
go.
white line right here. I looked up and I remember why it's there because I know what that white line is, and we talked about it if you were listening.
Yep, we talked about it. There's something that happened on a reopen, right? That's the top of the gap.
It's the bottom of the gap.
Yeah. Sorry. What did I
It's-
say? Top of the
Yeah, you said top. It's the bottom of the big daily gap that we had. So answer.
Yeah,
to
I'm
that.
sorry. I have it actually. I had it at 38.77. I've moved it up to 38.99. So I moved it up to the top of
Oh
the gap.
yeah, okay. So now
Yeah,
it's at the top of the gap.
It's at the top of the gap. So if it does get in that gap and it just keeps going, I don't want to necessarily get stopped out of that trade.
Yeah.
So the other thing you could do is what Travis is doing is just move it way out of the way, like some crazy number. And now he's just going to use his stop, his trailing stop to get him out of the trade.
Strongly recommend if you do anything like that to practice it over and over and over because it's a natural tendency to think, okay, uptrend, let me put my gain on the moon. And what you'll realize is that not every uptrend goes 300 points forward during the day. It's a tough realization, I guess, for a lot of people.
I just got.
I'm
my
out,
trailing
but
stop
I'm
got
back
hit.
in, and I should be. Hold on, let me look at the 5-minute. We scaled back in on the range. I should have 4 there instead of 2. Let's see if we can split them back up. Should be able to. There it is.
Yep.
I'm back in a half point
Oh,
above.
mine just kissed me to get
Stretch
back in.
these two up to about 9 and 1,000. Target 2 can go up. Getting comfortable with Ninja is really cool too, because if I don't have the right strategy, I can add contracts to it. I can make it into what I want to, right? I had 2 contracts on. I want my 4 contract strategy. We've recreated that with the 2s just by adding to it.
Mm-hmm.
No pun intended, added to it.
So why don't you do this on your screen? Maybe put so people can see your gains. How many you had each contract? How many points you made at each contract?
Okay.
So I know you got a +4, right? A +8.
+9, actually. I'm trying with 9. I don't know why that came in. I just noticed it usually went further. So I've had 9 on actually for a long time.
Okay.
But let's go back to it. So exactly. I stopped out once.
Yep. You got chopped once.
Let me recreate this. So 4C -2 was the first trade. And then the next one, we're 4C in again. And then let's see, 2 times 4. So we got 2 at 4. 2C times 4 points. And then I went up to 1C at 9. 1 contract at 9 points. So we've made a 4 and a 9. And then we came back down. We stopped out of our runner even, so that just cancels out that trade. We re-entered our trade, so now we're back in a new trade. So last contract, X out. 1C, we'll just put X or 0. And then came back in. We're back in a 4 contract trade, and now we've hit 2 contracts on our 4. And we're looking for our runner at 9 and then our big runner a long way away. So an extended target at 9, you could say, and then my runner will be the 64. The very, very solidified ones are the 4 and the 9, the 4 and the 8, whichever you choose there. Those are almost always exactly the same number, whereas the runner is something that I look at the market and judge, okay, how far is it realistic to go? Should I squeeze my stop up now? Should I let it keep going? We'll see what happens. But as of right now, we stopped out 4 times -2. So if you're counting just 1 point at a time, that would be -8. And then we had 2 times 4 is 8, plus 9 is 17, and then evened out. So it'd be a +17. And then right now we have 2 times 4 is +8. So a +8 evens out. So we are actually up 17 if you're speaking in terms of 1 contract.
There you go. I put it on your screen for you.
Thank you.
So -4, -4, +4, +4, +9, +0, +4, +4.
Uh-huh.
Each contract.
Yep.
And we're in one now too. Yay.
And we're still in this 4 contract trade, right? So the first one stopped out. The second one evened out. We're back in. The third one now filled for 1 times 9. So.
Yep. So we just filled on that one. So we can come back in here.
1C, and then we have our last one.
I don't know if this will work or not.
You just got to make it really close to where the old one was.
That's what I'm trying to do.
Uh-huh.
Yeah, my word. There we go.
So again, I'm going to move my stop up to break even and just kind of not lose any more on this. I could follow up to the last key level, but in this case, I'm going to give it a little breathing room. I might move it to plus a couple points or so, but just I don't want to lose on this last contract, but I don't want to squeeze it so tight that a regular retracement doesn't allow me to continue. One thing I do want to do is what you saw last time, where I take my gain, move it out of the way. I spoke about really wanting to practice that because what I noticed at one point in time is that I was the person who wanted to extend all my gains. And I realized so many days I would have done better just keeping things simple. Same exact entry points, but just keeping things simple, using risk management, I would have done so much better for weeks at a time. And when I realized that every trend doesn't go for hundreds of points. And I know it sounds so obvious. It's like, well, it took you that long, dude. Like I knew that in my first month. But it's really cool. Once you learn to use trailing stops and extend and start scaling out of trades, you want to extend every trade.
Hey, Travis, this is a good example too of watching a 5-minute chart. And if you have that 30-second opening range, that even if you didn't get in on the 30-second opening range in the beginning, look what happened on a retest of the opening range. And we talk about a retest of key levels quite often, don't we?
Mm-hmm.
Well, look what happened. It literally came down, retested that opening range on the second 5-minute candle after opening bell, retested it to the tick. Literally to the tick. Actually, it went a tick below the opening range and then took off again.
So picked up everybody at the bus stop and didn't stop anyone out. Another way of looking at that. Came all the way back to the key level that I don't want to say everyone, but that a lot of people were trading. Mm-hmm. As long as you had your stop at least a quarter point under it, a half point under it, you didn't stop out. So this is a train that I would not go short in front of. Everybody's on this trade. What does that mean? It means that a lot of people, we just talked about scaling out. Let's say I had 4 contracts in here. It starts going up. I've scaled out. Well, now I scaled out of 2, right? Now I've got 2 leftover contracts that as this pulls back, I might choose any key level to start scaling into, knowing that I can scale into a trade and keep my average position behind my stop. Meaning I'm just adding contracts to a trade that I'm already ahead in as it continues forward. So bottom line, once traders get up in a trade, a lot of people who scale out, they start to stack in the direction of that move. Knowing that everybody at this bus stop got picked up tells me that I don't want to be in the way of that whole bus full of people that are trying to run this up.
Doing good, doing good. And for some people, this might be their trade for the day, and they go fishing after they're done with this trade.
If this was my live account, I would be done for the day for sure. I could already be done for the day.
Yeah.
Could be done for the week. Been some good trades in the last few weeks, man.
Mm-hmm. There has. Well, and I think we did a great job yesterday too of not getting too chopped up.
Yeah, exactly. I ended up going positive.
Yeah, and that's one of the toughest parts of this trade is identifying those days where it just is chopping, right? It's like, oh, chop, 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 chop. And that happened last night at the reopen to me. I was like, oh man, this is brutal. And finally I stopped. And of course, 15 minutes later it took off, but that's okay. Staying out of that chop, at a certain point where your risk tolerance is hit and you're like, okay, enough is enough.
Yeah, exactly.
That's the key. That's the key. So we're continuing to develop this trade, folks, and so far so good. So we're pretty happy about it.
Wow, look at that 15-minute chart.
What you're saying applies to trading in general too, is just knowing when to stop if what you're doing is not working. And then also, if you've proven your zone to yourself, not getting so nervous when it is working that you stop. I know Crudelli, that was one of my favorite lessons that he spoke about, Mr. Crudelli, if you will. But he talked about a mindset where once you're up in trading, a lot of people get nervous. Whereas when you're down in trading, the thought is just keep trading until I'm positive, right? And I thought about it a little bit and I thought, like, what would be the point at which I have to stop trading? Well, if I'm a little bit up on the day, I want to keep trading. And if I'm a little bit down on the day, I want to keep trading. If I'm way up, I might get nervous, but a lot of times I just keep trading. So the only time I would really stop is if I was so far down that I just had to. Other than that, I wanted to trade until my time was up. And what I realized was there was a balance between knowing my zone and seeing where I'm at on a daily basis. And sometimes it's like, if I'm up 20 points on a day, I don't want to end that day negative 10. So I might use, in the same way you'd use a trailing stop on a trade, I might use a trailing stop on my daily total and just say, I'm up this much. If I get back under that, I'm stopping for the day. But as long as I stay above that, I'm going to keep going. And that was the second part of what I wanted to talk about, is where I could say I trusted my zone, but I would get so nervous after a trade or two. And I see it in other people too. I'm not as much like that anymore, but you get so nervous. Maybe I should just stop now. I just want to trade. Maybe I should just stop for the day. And then you look back and realize I would have been 4 for 5 today if I'd have just followed my rules and kept trading. And what he spoke about was really taking what you can from the market when it's giving to you, because when the market's taking from you, it's brutal. You get beat up bad. And there are days that will go well, but if you take your well day and take one trade and stop, then you've now missed a huge portion of your reversion to the mean zone, if you will. So
yeah, knowing when the market's giving and knowing when the market's taking from you is super key. It really is. When you can identify that, man, makes a huge difference in your trading, because now you're able to capture those days when the market's giving and you stop when the market's taking from you. So, hey, do me a favor. Will you just delete your drawings? I want to take a quick screenshot here.
He likes his better.
No, I like yours. Your trade. I think I missed the second one. So, but you got in this one very nicely. Yeah, you're good. Ah, crap. Hold on a sec.
Yeah, I got in twice at the opening range and was able to stack in on a momentum move in the middle. So I've still got one runner on. Everything else is filled.
Excellent. So hold on, let me grab a picture here. Dang it. So if you want to talk about Sim Millions for a second here, Trav, we got that coming up, right?
Yeah, sure. We do have Sim Millions today. We'll start setting up about 10 after 10, between 10 and 10:30. We kind of talk about setups. We start at 10:30, but Sim Millions is a trading competition we put on for our members. It is a free trading competition at the moment. We may do paid competitions again in the future. Just keep an eye out. But during Sim Millions, it is a one contract trading environment. The goal there is to let everyone be on somewhat of a level playing field. So the person who showed up a month ago often beats the person who's been here for 4 years. Maybe not often, but it does happen pretty regularly that somebody, you're like, whoa, they just killed it today. And the reason is it's a one contract trading competition where you have to stay in your trade for 10 minutes. You can choose any risk management you want, but stay meaning you cannot adjust your stop, you cannot adjust your gain or your profit, you cannot apply a trailing stop, you cannot touch your trade for 10 minutes. And Sim Millions is as much as an exercise as it is a competition. For me, it really helps to just reinforce that, know where your stop is, know what your rules are, know why you follow what you do. And it also, to me, the number one biggest advantage of Sim Millions is it creates an environment in which you need those points. It's so much easier on playbacks and sim to sit there and say, this is my zone and I'm going to wait for it. When you put people in a competition, I know I talked about this the other day, it's hard to make the argument that the candle we start on is a good trade for a lot of people. But so often we get into a competition, everybody smashes the gas pedal and half the room's in a trade in 30 seconds. And one of the biggest lessons from Sim Millions is that trading more does not mean making more. People want to just, it's time to go. Let me go make points. Click, 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 click. And they realize, whoa, there's a reason I have a trade zone and why I wait on trades. And maybe the best way to trade positively isn't to just trade more. And that's one of the biggest lessons that I've taken from Sim Millions and that I hope others can experience too, in which you get into an environment in which you need the points as close as you can to like real money, if you will. Because when I'm on sim and playbacks, I can wait all day for my trade. When we're in a competition, it's like, I got to beat somebody. I got to make that money. I got to make those points. And you realize what happens when you have the attitude of, I need points. And that's one of the biggest lessons from Sim Millions. So even if you don't think you're going to win, if you're kind of newer, we welcome everybody to come play, even if you're not on Ninja, as long as you're a member of FNL. You're welcome to come join. You will have to type your trades into chat for transparency purposes if you're not on Ninja. If you're on Ninja, we can share your screen. We can see your P&L. We could also check it if we needed to because your trades are saved in your trade performance. So if there's any thoughts or questions, we can go through it. Yeah.
And it's fun. It's really fun.
Yeah, sorry to interrupt. You have to take 3 trades over the period too, so it's almost a way of pushing people in if they're too conservative, maybe slowing people down if they're too aggressive, but it's really a balance of transparency as well. At the end of Sim Millions, you had an hour and a half to trade. You have to say, "Hey, I'm Roger R, and I just made 7 points, or I just lost 47 points." And it's not that the room will ever make fun of you. I love the environment here in which we all support each other.
Yeah.
But for me, myself, I had those days early on in Sim Millions trying to kill it. One day I'd kill it, the next day I'd be negative 30, and I realized that it was much less consistent to try and kill it. Could I do it some days? Absolutely. But I also had blow up days that were bigger than I ever had Sim, ever had live, ever had in playbacks. And it's like, I showed up to a competition today. I was supposed to do good. Anything else in life, you give me a competition, I'm a kick butt, dude. Like, let's do it. I'll go win. But in trading, it's like that attitude of I'm gonna kill it today is just it's digging a hole for myself. And it's really fascinating. It's been a huge learning lesson. And again, I hope others can experience something similar there.
Love it, dude. Love it. So, all right. Well, I think we're going to end the YouTube live stream here. So great job today, Travis. Thanks for all the participation from folks. Randy jumping on the mic and people in chat. Bernie, great job with your opening bell trade. Love it.
Again.
Yep. Great job. So thanks everybody for coming out, and members, of course, stay logged in. We'll get Sim Millions going and have some fun, and have a wonderful weekend. Thanks again, Travis.
Yep. Happy Friday. Have a good weekend, y'all.